we are now starting to look, I'll magnify that for you, as to what else could be occurring. So as we go forward on the weekly chart, I'm sure you can all see my screen. Does everyone know what we see right there? What pattern on the S&P 500 occurs right there in March 2007? That's right, a head and shoulders. So many people talk about the crash of 2008. Well, you're a little bit behind the times, because the crash started in March of 2007. Because this is when the high-frequency trading and the volume that controls where the market goes ultimately started to say, let's put in place the highest probability pattern there is, bearish pattern there is, in a bullish market. And this is it. For those of you who've studied technicals and bearish patterns, the head and shoulders ranks #1 of bearish patterns in a bullish market. The reason why is because it's there to trick you. Because the nature of a head and shoulders is to drive prices to new highs while smart money distributes, while it sells. So that's why head and shoulders are so common in a topping market, because they're the best way to trick you out of your money. So let's take away those levels because they're no longer important. We've identified the new trend, and you get this lovely little head and shoulders here. Left shoulder, head, right shoulder, and all we have to do is just simply measure, and we get the exact level of the drop. So we drop to that new level, and then what else do we create? A second head and shoulder. Okay, so there's the first, here's the second, and then another drop. I've already got this line here, so there you go, a little bit thicker for you to see. Then we drop, and look, that's exactly where we establish new significant support. Now, as we start to form a bottom, does anyone notice what pattern we see on the consolidation of March 2009? Yes, exactly, JJ. An inverse head and shoulders. There's your neckline. There's your head to neckline. Measure that out. And that's where we go to. Straight up and then forward. So some may say that the drop of 2008 was unpredictable. It was chaotic. Who could make money in this market? But if you were looking at the highest probability pattern that exists for technical traders, the market moved like a well-behaved child. And this is just one factor. So let's fast forward to today's market. Now, let's go from 2011 on. What do you notice? We are in yet another long-term upward channel. One touch, two touches, three touches. I'll make that a little bit longer for you so you can see. One touch, two touch, three touches, four touches. We break down, rally into resistance, as any good breakout does, and failed from here. So we are seeing yet another very similar setup that we've seen in 2008. Okay, so that's just one part of the equation. We've got the charting, at least on our side so far, but what else can we do to see if the rules agree? Well, let's have a look at the smart money as a form of a technical indicator. Now, many of you, I'm sure, have heard me talk about this before, but a true uptrend is commonly known as what? Now, most of you know the answer, but what is a real uptrend? What do most people say an uptrend is defined by? Yep, higher highs, higher lows. Now I'm going to disagree with that, because what we're really looking for when we say, hey, what's an uptrend, is what we're really asking for is, what type of stock do I want to buy? And people say, well, a stock that's uptrending. And they say, okay, well, what's an uptrend? And they say, well, higher highs and higher lows. But that's not really what you're looking for, is it? Because if you had a stock that was making higher highs and higher lows, but the range was contracting, that's a rising wedge. And that pattern is bearish. There is a 67% chance or more that it'll break down, based on the statistics that I follow. Okay, so that doesn't work. What if the range was the same? What if it was just the same range moving up, but what if it was closing lower and lower in the range? Would that be an uptrend that you'd want to buy? Not me. What if it was doing that and the volume was dropping? Is that an uptrend you would like to buy? Absolutely not. So what we have to realize is that the true definition of an uptrend is if we get higher highs and higher lows, as well as volume increasing with the move, not decreasing, and you get closes in the top half of the range. Now, what you may not know is that you're already looking for that when you look at your popular technical indicators. Directional movement, for example, for those of you who use that, looks at stocks making higher highs and higher lows. Stochastics, which is maybe more popular, analyzes whether the stock is closing in the top or bottom half in the range. Now, hopefully you all look at volume, but if you go further than that and look at on-balance volume, that takes it a step further and looks at whether it increases with price or decreases. But to take the mumbo-jumbo out of it all, basically all of the stuff that you've probably populated your chart with over the years is all trying to find out one thing, and that is the stock uptrending? Because if all of those things are happening, it means that volume is going in and staying with it. But hang on, who is the volume? It's the smart money. That's where the real money shot comes from in terms of picking that perfect trade, is where does the volume come from and what are they doing? So what we're seeing is if we combine all of those factors I've talked about, closes, volume, and the expansion of range in terms of highs and lows, or the lack of it, we can combine all of those things into one indicator which we use, which is Twiggs money flow. Now, this tells you, this is one of our smart money indicators. If smart money is loading up, what you'll see from the Twiggs money flow is it will go with the move. You'll see higher lows, you'll see higher highs going with the trend. So smart money's with you. It agrees. It's happy to buy and hold, which is what substantiates those higher closes and the volume sticking. But what happens when price continues to rise, but the Twiggs money flow declines? What that means is that price is being manipulated. Now remember, if you are the Fortune 500 companies of the world, if you are Warren Buffett, if you are anyone with billions of dollars invested in the stock market, what serves your best interest if you feel the market is topping? Are you going to take all of your influence over the world economy and the worldwide press and publish, I want you all to know, you should sell before I do? Or would you like to publish the most positive news possible and start to liquidate? The answer is pretty clear. Now, that's why the 99% own less of the world's wealth than the 1%. So once we get rid of this idea that they're all looking out for us, we start to look at what the money is telling us. And what we can see here in the chart on the S&P 500 is that as of this point in 2014, the smart money started to say, here's a good chance to start offloading these billions of stock. just as we saw that a year before the 2008 crash really started to happen, they were doing it there also. And you see this big divergence in money flow. Now let's go back to 2008 and tell me if you see a very similar pattern. So there's that channel. Can everyone see a very similar thing happening there as the market peaked in 06? Look at what the smart money did. Went from higher highs in a stable economy to suddenly straight down. So once again, fast forward. Very similar situation. Question, am I in a tropical forest? Very close to. I have king parrots, cockatoos, and a bird and a cat within about a 50-meter proximity of me. So you may be able to hear them. Okay, so this is basically what we're seeing. So let's go back now again and look at how this relates to the head and shoulders pattern. So we've seen the money flow is coming out. Well, let's look at the head and shoulders pattern now to see if we have that exact same situation. Well, what we have occurring here, in my opinion, is the beginning of a head and shoulder pattern. The key to great technical analysis isn't to see what's already occurred, it's to see what is occurring next. And to do that, you need to understand what a pattern looks like before it completes itself and what that means afterwards. So what we're looking for is this symmetrical, let me change the color of my pen here. What we're looking for is a symmetrical triangle. Doesn't matter what the time frame is, it can happen over 3 bars, 10 bars, 20 bars. We're looking for symmetry. And we get the symmetrical triangle here on the left shoulder. Then we're looking for a symmetrical head, then a right shoulder, and then a tank. So by everything that we're seeing so far from a technical basis, what I see in the stock market right now is that the S&P 500 is forming a head and shoulder pattern. And what that would mean is this. What that would mean is that we are headed for a test of support right around this 1950-1940 zone. That's where the top of this channel is. We may have a bounce there. This is in the longer term scale, but where we are then likely to drop down to is the 1800 level, and further from that, what we are looking for is a drop to about 1600 on the S&P 500. So this is a hypothesis. So how do we make this stronger? Well, let's have a look at these smaller time frames. Let's see if we're looking at the weekly chart of course here. So let's look at the daily chart. What do we see on that? All right. Well, let's zoom in. Well, if we look at the daily chart, and I'll just delete. I'll just take all of the noise off the chart, and let's have a look. So when we have a look at the S&P 500, what pattern does everyone see here? What pattern does everyone see on the, yes, you can't guess if you're already a student, Jay, but go ahead. You see a head and shoulders. And let me explain why. Because this comes back to a very fundamentally crucial thing that you have to get right with your trading. Okay, and allow me to digress for 1 second. If 80% of the stock market operates based on rules and patterns, what is the most important thing to figure out when you look at a chart? My argument would be the pattern. Because if you know the pattern that 80% of the market's trading, then it's a very open and shut case. If you know the pattern, there are very specific rules on how to trade it. There's no guesswork. There's no calling your buddy or your stockbroker or checking in with me. There's no guesswork. If you know the pattern, there are specific rules to trade it, and whether you're right or wrong, you do it. That's how you make money. You stick to your rules. And with patterns, there are specific rules. So the most crucial thing you have to do when you look at a stock is discern where is support, where is resistance. The correct way to do that is to go left to right. So let's start back on the left of the chart. We go left to right. We see we have an ascending wedge. Bearish, breakdown. The rules of an ascending wedge is to measure the length of the wedge, and that is the likely breakdown position from the point it'll break out from. We then get another similar pattern, but more of a channel base. And you can see this kind of breaks down over here. Now what we want to look at, or what I want to bring close attention to, is how the S&P is shaped up on the right-hand side of the chart. So when you first see the market up until this date here, all you could have done is draw a trend line between the two tops, and that would have been the right thing to do. The next right thing to do is then to duplicate that and see what you see on the bottom. Now, what you could quickly say is, oh yes, here's a downward channel, and we won't worry about this little dip here. And that's fine, but if we follow a different methodology where we adjust the trend line and say, well, what about that? What if that was actually the trend line? Because the problem with this top line is that the stock never came up to that, but yet it reversed anyway. So if the stock went up and never reached that trend line but reversed anyway, then that means something else is in control. So we take that away and we say, well, what about this? What if because we can clearly see this was a breakout through this line. We can see support was here, support was here. What if we duplicate that? What about that? Well, okay, now that works for the breakout, it works for support here, it works for support here, resistance, all of these levels of resistance it works for, and the reversal there, all except this tiny little intrusion above, right in the middle, which is what? Characteristic of a head. So then we start to take that a little bit further, and we say, okay, well, if that is a head and shoulders on the daily chart, where should that drop to? And we get our basically a 1910 level. Okay, so let's remember that 1910, and then once again we'll go back to our weekly chart, and you can start to see that that would actually come into place right around, let's extend that line, right around here, right around where that may touch down on that neckline. Okay, now let's take this one step further. Let's go into the Fibonacci's to complete the equation. Let's look at a Fibonacci extension of the peak to the sharp reversal we saw earlier this year. And if we do that, where is the 100% Fibonacci extension from the peak to the level of significant support? It's at 1600. All right? Maybe that's just a fluke. Let's delete that. Let's do a Fibonacci retracement from the major rally that stemmed from 2011. Where is our 50% Fibonacci? 1600. Maybe that's a fluke too. Let's delete that. Let's go all the way back to the next significant point of reversal, which was 2008 itself. And let's do that one. Where is the 38.2% retracement? Exactly. So trading isn't about having an idea and arguing it. It's about having an idea and seeing if the rules are significantly in your favor, that it is right, that it is quantifiable. I don't care about my opinion any more than the guy on TV spouting his. It's just my opinion. What I care about is what the numbers tell me. And when I start to see all of this stacking up, we come back to that previous slide. If everything that happened in 2008 that would have saved your butt or made you a ton of money had you have shorted the market, if all of those things are happening now, why would you not go with that probability? So I'm not arguing this is definite. No, nothing is definite except death and taxes. But if everything that was saying get out in 2008 are all happening now, if not worse, wouldn't the probability be worth taking to go with it to the downside? I'd say so, and that's why I'm here to talk about it. But let's go one step further. Let's go 2 steps further. Here's the next smart money indicator. Let's look at bonds. Now, I don't trade bonds, never will. But the people who do are the people that own the companies that make up the economy. Google, Yahoo, IBM, Microsoft, the S&P 500 guys, as well as the Feds. Now, if the stock market, if these big money, smart money guys think, hey, this market is in good shape, we're going to buy a whole lot of that stock market. What do? They invest in corporations. They're investing in the stock market, they're investing in corporations, they're investing in growth, and they're investing in corporate high-yield bonds, supporting risk, the opportunity of growth. So what you should see if the market is bullish is high-yield bonds should be going up. And if we go back to 2009, when the market recovered, they did. They did go up. They did go with the rally until they didn't. Until basically the mid-2014, but really they stopped making highs and made lower highs as of mid-2013. Anyone know what economic events of significance happened in 2012, 2013? Thank you. It wasn't the Queen, it was quantitative easing. 2, 3, 4, and 5, and however many numbers you want to count up to. QE kicked in, and that was when the smart money said, right, we have juiced this fruit tree for as much as we can get. And that's when it turned over. And in fact, if you want to take the technical standpoint, that's when that rising wedge formed pretty much perfectly in high yield bonds on the smaller scale. It squeezed and then it popped. However, the market continued going up as we kept buying, and the high yield bonds continued to dive. So whether, again, what I think doesn't matter. What Lawrence Page of Google does, what Bill Gates of Microsoft did, and every other guy you want to take a stab at, they've all been getting out. In fact, if you look at the trend for the last 3 years, there's been an average trend for every one major CEO buy in his own company, there's been about 13 people selling. And I get these statistics by watching what the ratios have been in FinViz. Okay, so that is those are the scary figures we're seeing, and it's conducive with what we're seeing in the bonds. So what I'm telling you is that you don't need to go and get into any, read the newspapers, you don't need to go and get an economics degree. What we simply need to understand is what's the pattern of the stock market, what's the smart money doing from a Twigs money flow standpoint, and what are the high yield bonds doing? Okay, now let's go into this week's current events. So the Fed made a pretty important announcement, eh? they said they were going to raise rates. This should have been something that the news was touting would be positive for the economy. Well, let's have a look at the week. High yield bonds bought 36 million shares on the HYG on Tuesday. When the Fed made their announcement, that dropped to 30.58 and then just turned around and plummeted from there. And if we look at our moving average, the 9-day, it did exactly as any good downward momentum stock should, which was run into resistance and turn for the south. So is everyone clear on what we've covered so far? I see there's been some questions popping up. So I want to make sure that we're all on the same page before we go too much further. Because once again, opinions don't matter. It's how do you take an idea and push it through the funnel to make sure it checks all of your boxes. All right, awesome. Okay, so now let's say you say, well, John, enough of this technical mumbo jumbo. What are the insiders actually doing? Okay, well, let's go have a little look. I mentioned FinViz before. You want to have what the big boys are, whether tracking indicators or bonds or anything like that. Well, let's make it real simple. Let's just go straight to FinViz. Let's click on Insiders. There, the tab will be on everyone's screen when you bring up the web page. And just click on what are the top 10% owners of the biggest companies in the world doing with their own stock. Here's a little clue. Red represents sell. Do you see what I'm getting at? This hasn't changed for a very long time. What about the other guys? What about the top insider trading? Hang on. No one wants to be the last guy at the party, but I see a trend that doesn't invigor confidence. Now, once again, we could be absolutely wrong. And look, I have no doubts we could possibly have a rally next week, some kind of bounce off of the neckline, because if we look at the S&P 500, I mean, on the term, let me just stop the keyboard. Maybe I'll get some correct ticker symbols in there. If you can beg for patience. We'll come to the chart. But what we're seeing here is that the market's got some trouble. Now, this is where we start to. There we go. Thank you. So if we go to the S&P 500 on the daily chart, what we will see is that the S&P 500 is approaching that term support. So we have this head holder. There's support here around 1990, and we could run back up here into the kind of 2024 zone. But what looks more likely is we're going to go further down. Okay, so we may have had a bit of a glitch in the internet. Can everyone hear me clearly now? Just a second, folks. Okay, can everyone see the chart there? The S&P 500, and can everyone hear me clearly? Okay. Maybe I was getting a bit too excited with my charts. Okay. All right, good. Sorry, guys and girls. So that's basically what we're seeing in the short term. Is we're seeing that maybe everything is crashing. Yes, damn Australian internet. So we may get some support here. We've got to anticipate that there could be a little bit of a bounce, but mostly this pattern as it currently sits is negative. So the idea is, how do we put all of this together? How do we take this then and make trade ideas out of it? So you start to think about what this means. Now, a lot of people overcomplicate the stock market. They get into analytics of economic factors, looking unemployment rates. I don't, because again, I don't care what I think. So I'm going to sit there and read the newspaper for 3-4 hours a day and try and interpret what unemployment figures really mean. Well, who knows? Unemployment's better? Maybe. But what about all the people that aren't applying for jobs? What about the people that are employed now, but they're making 30% of what they used to make? I mean, I can go through all this information and try and pull out the BS and make my own opinion, but does it really matter? Because no matter what I think, the 80% of the volume that moves the market already knows. So I'd much prefer to actually not really know why they're buying or what they think, but just simply follow what they're doing and work 1 hour a week and employed. Exactly. I'd much prefer to let the big boys do their job. Let Goldman Sachs spend their billions. Let them put satellites in the sky to monitor oil explorations in places we don't even know about, so that they can load up on stock before the market even knows that there's an exploration going on. Let them do that. We're never going to be able to beat them at that job. But what we can do is watch what they're doing. And that's where all of this starts to come into play. So how do we start to take the idea of combining all of these different signals that we're seeing into how we make money from the big one, the big short? Well, firstly, we look at where the weakness is. High P/E ratio companies in places that consumers aren't spending anymore. The first time I did this webinar was July 26th, and I announced to all the attendees in that webinar that Polaris, PII, was an excellent short, because we were heading into a hot winter, that if people weren't going to be able to get good interest on car loans, they certainly wouldn't be out buying snowmobiles when they only can get, say, 3-year terms on them. And Polaris, of course, is subject to all of those problems. Polaris was in a bearish pattern. The money flow had plummeted, as you can see on the chart, as per that vertical line. And we picked up $110 January calls for about $4. And we sold them a few days ago. Oh, I sold them at $17.10. I could have held on to them a bit longer and sold them around 25 something today, but I got out around $95, and there was a nice several 100% return. Still in PII, Bob? Well done. It's probably going to. This could be a $30 stock come mid next year. These were puts. We bought $110 puts of January expiration. So there was one of them. Akamai, I think is AKAM, was another one. Massive insider selling. Big problems with its P/E ratio. This was an alert from when it was up at $76, and we'd alerted a target of 56 on Akamai and bought the puts on this one as well. Plummeted. Capital One was another one of these. Same strategy. High P/E ratios with a technically very weak pattern. And again, look at this stuff. What do you see happening as it soars into the sky? What was smart money doing? Selling off. And when you get that massive divergence, and there's your touches, 1 touch, 2 touch, 3 touch, 4 touch, crash. Las Vegas Sands, another one, same kind of thing. You just see this constant trend. Look at that. Stock going up, all is good, but the smart money sharply selling off right before it broke down. This is another one we bought puts on. So this is where we start to focus our attention, is we start to realize that if the apple is that rotten, then what we need to do is we don't try to time the market. And I've talked about what I feel the market should do, but as confident as I am in where the S&P should go, that's the first layer of analysis. Once we're confident that the S&P should plummet, then we go to the next stage. Then we say, what is the weakest sector? That's another layer of insurance. Then we go, what is the weakest stock in that sector? And then we look at where is the best possible place to enter an optional stock position in that gives us the absolutely best possible risk versus reward. And that's the final checkpoint. So once we go through all of this, the idea is that even if we're absolutely wrong about the stock market and the market rallies another 5%, that stock is so bad it will still drop 20. And if the market goes down with it, 30, 40, 50%. That's the focus. So the market and everything I've talked about so far is the backdrop that allows us then to concentrate on finding the absolute best possible shorting opportunities we can find, where we can buy options that are maybe, or stock, or I should say short stocks, or buy options that are, that like Larry was talking about, we don't know the time, so we give ourselves time where that premium preserves itself. We buy 3, 4, 5, 6 month out options. But we buy them that are options that are 20 or 30% out of the money, like we did on PII, like I'm currently doing. I bought options on this yesterday. BERY. Go take a look at this stock. Tell me what you think about what their insiders are doing. I loaded it up on, I think, $35 puts at about $1 just yesterday. Now let's have a look at the insiders on this one. Now I don't care what the market does, but this is a rubber and plastics company. And if you look at their yearly insider selling, this is from insidercow.com, have a look at what the activity's been like. Massive selling. And from the general counsel, financial officer, president, vice president, financial controller, or executive vice president controller, all of this right here in November. We've got a P/E ratio of 49.6. And then when we combine that with our technicals, we have an upward channel, 1 touch, 2 touch, 3 touches. We've broken down, and the money flow is going right out the back door. So I don't care what the market does. I'm highly confident this will be a $33 stock within the next few weeks, only enforced by what the market's likely to do. Let me see if I can share some more with you. What was the other one? Voya. Same strategy. Have a look at this one, VOYA. This was one with a very similar pattern, upward channel. Actually, a complex head and shoulders, broke down out of its channel. That was where we alerted the short to it. But have a look. The whole time it was doing that upward channel, what was the smart money doing? Options on this one were up 300–400%. So this is where you start to kind of build these once in a decade opportunities where the market has poised itself to have a really big risk to it. And whatever happens, stocks that are susceptible to that will drop regardless. So if you can focus on that niche, you should be very well protected. And that's, I guess, the whole purpose of why we start to then develop scans to target those opportunities. Now let me have a quick look here. No questions yet. What about LQD? Well, we'll have a look at that in a moment. Now, I have the pleasure of being the last speaker today, so we've got some extra time to go through a lot of the Q&A. And I'm going to talk about some of the positions that we're currently in and so forth. But let's get the sales pitch out of the way, shall we? Because I know you're all expecting it, but I think this is probably the proudest product I've ever had, because we've been talking about this since July, and we're up. Our corporate trading accounts increased from, it's probably 30–40% overall, entire thing, over the last 6 weeks, just from trading these positions. These are positions, when we send them out to our students, we trade them ourselves. So we're not just, these are not hypothetical, these are things that we back with our own money. And we've been waiting for this to happen for a very long time. I remember back in 2009, where I'd invested all of my personal capital into building Acorn, into building another business I was in, and I didn't have the free cash to go and short the hell out of the stock market as much as I wanted to. And I just remember thinking, well, I won't be caught with my pants down the next time it happens. And as much as anyone here, I don't want the economy to crash. Who does? But if it is, I'm not going to lose any money, and if it is, I'm gonna make sure that I'm making money the whole way down. That is what we're here to do as traders. I donate to charity. We sponsor 23 children through World Vision in our family. But when it comes to the stock market, it's about making money. And the way that I have found that is most effective is by, once you decide on this being a business for you, you have to develop efficient ways to do it. You have to develop business mechanisms. And we'll come back to the charts here in a second, but I come across so many traders that sit in front of the screen all day long waiting for something to happen. They just work for the sake of it. I don't get it. Because to me, the definition of wealth, that's just my opinion, but you know, you go read the 4-Hour Work Week and so forth, and the idea comes across that who's the wealthier guy or girl, the person who makes 100 grand a year at a desk working 60 hours, or the person making 60 working 10. And I think that's the ratio you have to consider. I'd prefer to make a little less to have 90% more time to do what I want, or to travel, or to do whatever you want, really. And in the stock market, this is where I think that comes home to roost, is, are you being efficient with your time? Have you developed a strategy, like what we're talking about today, where you've targeted exactly what are the conditions that make the perfect trade, with the perfect pattern, with the perfect money flow, with the insider selling, with the P/E ratio that's extremely high, with the head and shoulders breaking down? If you know that is the best damn pattern you could find, why are you sitting in front of the computer waiting for it? We have these things called computers, and they get to do that job for you. And the first thing that those computers do is they can scan every stock every single millisecond, if you want to get that minute, but for me, every single day, at the end of the day, looking for when this perfect storm has occurred. So one, it makes it efficient because you're spending a lot less time. The second thing it does is that it reduces the amount of noise, so that you're not looking at trades that are distracting, that are garbage trades, right? And it reduces what your exposure is to stocks that all have the same variables, and that's how you get consistent results. You're looking for the same trade again and again and again and again, as boring as that might sound, but that's what you want. And then you can apply the same rules because you know the pattern, and you can get damn good at that one pattern. And if that's all you do, that's just trade that one pattern, head and shoulders. And then when you're making money, expand to the next. And going through that process means that once you know what you're looking for, it makes it much easier to identify, and starts to if for nothing else, lets you sleep better at night. So that's why my life's work has been in patterns. Now, you might be a pro option trader. You might be great at credit spreads. To be quite honest, I'm useless at credit spreads. I don't trade them, not because they're not wonderful, but because I focus on direction. I focus on finding the absolute best possible technical setup that we can find. And for those of you who've gone through maybe some of the other educators' courses that you've been offered tonight, this is where we come in. We have the scans and the research that will find the setups that you can implement that have that highest probability. So the whole proposition, I guess, of where you can start to put this all together is where what we're offering tonight comes in. So we put together a course in July when we saw all this occurring, which is called the Capturing the Crash or Perfect Storm course. And the whole focus of this, it's a 8-hour course. Now that doesn't mean you have to go in and spend 8 hours until you can start making use of it. This started off as a single 2-hour workshop that we launched back in July, and it was so successful that we realized we had to do more follow-up lessons to check in with the students to apply the strategy to live markets and really make sure people were not, getting back into bad habits, basically. So we did 3 more practical lessons on, once you know the perfect scan, what do you do with the list? How do you pick the best one out of those 8 stocks that come up? So the 8-hour workshop begins with a 2-hour lesson on how to find these opportunities. And what it combines is insiders, money flow, P/E ratios, market conditions, patterns. Everything that I've spent the last 12 years basically refining is culminated in this one scan, looking for the perfect opportunities to short. And we go through that in the first lesson. The next 3 are about how we take those stocks and identify whether it is an extremely high probability pattern or one that we're better off just moving on from. And how do we do that without feeling or thinking about it, but simply following rules? That's what I want you to leave this course with, is a rule-based decision making versus having to worry whether you're right or wrong. Right? So that's the first part. I'll go on about what's included in the course, but the second thing that I'm pretty excited to talk to you about is the bonus. Now, as I said, I love Jeanette. Jeanette Hubert, everyone there at Trade Thirsty is very close to me. They've been a big part of our business's growth over the last few years, and she said, well, you've got to do something special for everyone. And I was going to put on a competition to say everyone submit their favorite short for the market. We were going to do a prize for who picked the best one. But then I spent 20 hours of research between Wednesday and Friday researching this crash and feeling that we were going to come down. And what we published on Friday morning was a list which came from about 600 stocks we shortlisted, all the way down to our favorite shorts based on everything I've talked to you about today. And we published that out to our students. We published about 10 shorts, and to hedge against that, we also published a video on our favorite longs. Now the market corrected almost 2% after we published that video on Friday, and what blew me away was almost every single short plummeted, but more surprisingly is every single long went up. So a lot of people, when they pick shorts, the market goes down 2%, people say, yeah, well, you could have picked anything and made money. But what blew me away was that, well, what I was happy to see was that all the longs performed. And that is what you'll get as a bonus with your course, is we're going to give you the course so you can learn how to do this yourself and go through that material in your own time. But obviously, given the fact that the market is potentially poised to have dramatic moves in very short order, you'll get both of those videos. I call it the Christmas wish list when I send it out to our customers, and it's basically the top longs and top shorts of from all of our research. Comes with entry alerts, exit prices, stop losses, and as well we went in and researched all the option chains for the next 6 months and exactly what option we would play. So this on its own, I think will be something that will make a big difference to your trading going into 2016. It's probably the pride piece of my work this year. Now, before we go on, I'll take a couple of questions here. I need your link. I have to go shop my Christmas tree. Okay, there it is. TradeThirsty.com/toast. Is the scan for Think or Swim? We actually have the scan in Think or Swim, Metastock, Incredible Charts, FinViz, TradeStation, I think. I have to double check that. But if you have any program that it's not compatible with, we'll give you the programming so you can plug it in. Yes, that is US dollars, absolutely. I'm going for walkabout. There's a few Aussies in here. You're up as early as I am. Do you cover buying year-end tax sale stocks? I'll reiterate, that's a good question, but let me reiterate my standpoint on this. I don't actually care why stocks are going up or down. I don't care about events. I don't care about seasonal things. I mean, you can put chapters to those topics and say this is the chapter of, but regardless of the name of that chapter, what matters most is where is money going. So if I see money flooding out of silver, for example, like we do now, have a look at one of the stocks that you'll see in that video summary. Yeah, I'll leave the link up there. Have a look at something like PAAS, Pan American Silver. Now, what do I think about seasonality of silver? Don't know. Never followed it. What do I think of the chart? Well, I see that if we look at Pan American Silver, we have a head and shoulders pattern that we've broken beneath, and the money flow is tanking. I see that there is a easy potential for a 20% drop in the stock, and I see that the $6 puts that I looked at on Friday were $1.09, and I think that was March puts. So you tell me whether I care about seasonality. I like that chart. That looks great to me. Let's have a look at what are some of the other ones here that we've got on our little list here. I'll give you another little freebie. Oh, check this one out. So this just blew me away when I saw this one. VNTV. Here's another one of the top shorts that we published on Friday. Now, there is like 12 of these, just as good. Now, this one I own puts in. For full disclosure, I loaded up on puts. Actually, it was the largest position I took on Friday, was this one. VNTV. Have a look. So we've got this kind of uptrend. So you can see we've got an up channel, 1 touch, 2 touch, 3 touch, 4, break. Money flow coming right out of the stock. So before it broke the up channel, money flow, smart money, was as low as it was when the stock was $40. I easily think this will go down to $40. This is something I'm looking to make a 500 to 1,000% return on over the next 3 months. Now, there's the chart. Let's have a look at the actual insiders themselves. What was it, VNTV? Anyone see anything that tweaks your interest there, folks? It's a little bit odd that the Chief Strategy and Product Officer, Director, 10% owner, and everyone else is getting the hell out. Maybe they're planning their estate, who knows, but that was reason enough. This is exactly what, the beauty is this took me 2 minutes to find. It was one of the first on my list when I scanned for the high probability capturing the crash stocks. I went through them all for you. They're in the video that you'll get along with the course. This is just one of them, but this looks awesome. Okay. Let's have a quick look. I'm probably passing some questions here. I can stick around, so don't worry, I'm not going anywhere. Is TSLA a short? I just talked about this yesterday. This is the only time we've ever done this type of a report, by the way. It really is, it's not just a gimmick. It took a lot of time to go through every piece of the puzzle that just scrutinizes the very, very best. And these are the ones that came out. So this is where the stocks you see in the report you get is where all of my money is spread across those, apart from a couple of lagging positions like PII and so forth. What about, okay, so TSLA? Let's have a look at that one. Okay, well, I wouldn't short it because it's most positive. And for that very simple fact alone, it means it's not perfect. So this is what, I guess this is what I would like to enforce. Maybe just as important as what I've talked about today is be picky. Be a perfectionist. Because if you're not being a perfectionist, you can be damn sure the algorithms are. So, simple question. Would you prefer TSLA as a short like this, or would you prefer TSLA as a short if it looked like that? A or B? Obvious answer. B. And what I'm telling you is that the only reason that you can't find this that looks like that is because you're not looking at enough stocks. But yeah, you can't look at 8,000 stocks a day. This is why scans come into place. So the whole purpose of having scans is to find TSLA, which is a rising wedge, which is bearish, but with money flow that supports that even though the stock is rallying in a bearish formation, there's a significant, strong undertow of the stock. Okay. See if we can look at another one here. Let's have a look at GLOG. This is another one of our shorts. Now the only thing with this is it wasn't really optionable. We didn't alert people to options. We just picked it as a stock play. But have a look at this. Same stuff. Very weak upward channel. Rising wedge. And you got this nice, beautiful breakdown. It was one of the top stocks that came up in the scan, and our alert was at 10.53 to short down to 7.83, and it accomplished that in no time at all. So this is what will come up in your stock. Question: touches need to be bodies or wicks? It needs to be wicks. Bodies don't tell you. They tell you the struggle during the day. So the bodies versus wicks tells you the battle of the tug of war, if you will. You've got sellers on one side of the rope and buyers on the other side of the rope, and they're pulling in two different directions all through the day. But what matters is who wins and when they win and if they give it up. That's what the open and close and versus the range means. However, when we're dealing with support and resistance, we're not looking at time or who won during the day, because where the stock closes or opens, you can change that, right? If I look at a 1 hour chart, the open and close will be different to a 1 day chart, which will be different to a 1 week chart, which will be different to a 1 month chart. But you can't tell me that if I change the time frame, I get to change support and resistance. No. No, support and resistance is not subjective. Support and resistance is static. It's been drawn there before it even happened. And that's why it can't be defined by something that is subjective, such as time frame. So therefore, if you follow my drift, support and resistance is defined by the highs and lows because we're looking at where price ceases to be able to move regardless of when that happens. Hope that makes sense. Is the Twigs Money Flow proprietary? It is not. We actually have. It was designed by a gentleman called Colin Twiggs, who designed incredible charts, and we have the coding for you that we put together for Think or Swim, for Metastock, for TradeStation, for all those popular programs, and you'll be given the option to download that in your enrollment package. Okay. Let's have a look here. Are we getting just one-time recommendations? All right, well, let's move forward a little bit, shall we? Along with those recommendations or those alerts, you will also have access to 2 live sessions this coming week. Tuesday and Thursday at 7 p.m. Eastern, we're going to be doing a 1-hour program specifically focused on all of those alerts we sent out that you'll be receiving over the weekend to review, as well as, of course, the market conditions. And we're going to be going through all of the stocks, the reasons why we like them, the market review from macro to micro, entries and exits and updates, and myself and the other coaches will be debating them, as well as what we feel are our favorites or not. But of course, they should all agree with me. but no, we call it that's our trading room, but it's going to be very focused on these current players because these plays could last us a month or 2. These are the highest quality I could find in the indexes. So that's basically the focus of these lessons. Okay. Let's have a look. Now, another point, I've been focusing on the shorts. I'm just going to throw something out there. I mentioned that you're also going to get our favorite longs. Now, a great trader, the test of a great trader isn't how much money they make going against the market when it's dropping. It's how much money do you make going long when the market drops. That's the test. And this is what I was probably the proudest to share with you. This is what you'll also get access to, the longs. Have a look at, switch to that, SUNE. SUNE is something we alerted to our clients in our one of our classes on Monday night. This is called a fallen angel pattern. Sun Edison. Options were up 1,000% over the last 5 days, but this is a classic example of a momentum, a frying pan, bump and run, whatever you want to call it, where that rallied from $4.12 on Monday to $6.51. That is a stock going counter trend, one of the ones we sent out as an alert. CEQP was one I sold on Friday after buying it from a couple of days ago, as per our alert. Up from $15 to a high of $17.30, I believe I sold it at. Again, going against the trend. FXCM, my favorite of them all, up 40% on Friday. So when you go and watch through the Christmas wish list of our favorite longs and shorts, please do go through the charts of every single one and note that 80% or more of all of us alerts from Friday moved in the direction they should. BBRY. Okay, let's have a quick look at that. Now, I'm open for questions here, so just throw them at me. BBRY, let's have a quick look. BlackBerry. Now, I know this was a comment from the workshop before, as I was watching on. My concern with BBRY is when I look at the resistance versus support, I start to see a little bit of a shake here. So my comment would not be, hey, I'd short the hell out of this, could be a head and shoulder, nor would it be, and I would probably need to adjust that. So you've actually got a rising wedge here type of thing. Or even an ascending triangle. Look, my concern is that the money flow is negative, but it's crossing positive. So what you've probably got here on BBRY is an ascending triangle, in which case you'd need to measure the length of this of the channel there. That should be its duplication. So I would be looking at that as a target of 933. So the question is, up from where it is how much risk of a pullback do you want to accommodate, given the potential risk in that resistance overhead? Are there option trades in the alerts? Yes. Remember, the alerts, I probably focus too much on those. The alerts are the cream in the crop. The alerts are what you get as a Christmas wish list gift. What we're really giving you is we're giving you the keys to the treasure trove. We're giving you the strategy. We're giving you the 8 hours of education on how to find it, how to scan for it, things that have taken me the better part of 10 years to figure out, and more money than I care to admit of losses of trying bad strategies until you figure out the one that works. Those answers of what I figured out are in the course. So way beyond the alerts of what we feel will happen in the next 3 months, this is something you're going to use for the rest of your life. So that's the real value. But the instant gratification is the stuff that I found over the last few days, which really does excite me. So again, this isn't just airy-fairy stuff. I took half my portfolio and bought all of those alerts on Friday morning. Some of those we've sold out, some of those day trades, but let's have a look here. Baidu. But yes, there are stock criterias and option criterias. How long are those calls good, John? Well, we're looking at a 3-month hold. The options that I bought are March, April, and June puts. March, April, and June puts, as well as calls. One of the ones I bought calls on. I love giving you stuff. I have to stop here. I'll spoil all the surprises. Have a look at Suncoke Energy. This is one I hold calls in. We alerted this to our students on Wednesday. Now, on Wednesday, it was $3.05. Today, it is $3.64. This, again, despite the market, has had incredible strength. And as a good trader, you focus on the individual stocks, not the market. This is a great hedge against our big focus on the shorts, and has performed awesome. And I will continue to hold this. These are calls. I think I hold April or June calls on this one. GoPro. Okay, GoPro, interesting story on that one. Has had it came up as a long for me, but it's got some insider selling. And the fact that it had big insider selling immediately meant no for me. So again, it's not whether it could go up. I mean, if you held a gun to my head, I would say probably should. But playing the market or making money in the market as a business, more importantly, is like a good poker player. You've got to know when the odds are highly in your favor. And in the stock market, you get to look at every single hand there is every single day without paying anything. You get to look at every single stock's chart and say, is that aces, or am I holding a 2-6 unsuited? And then you get to decide whether you put any money on it or not, unlike a card game. The trick is you have to know what aces look like. Now, this could be a good hand, but the problem is that they've got the insider selling. So if we had all of this happening, and the stock was, and the 50-day moving average had converged, and all the moving averages were underneath it, and there was insider buying, then I'd go gung-ho on it. But it doesn't have everything. It doesn't have all the perfect pieces. And so it's not that I don't like GoPro as a long, it's that I would prefer GoPro as a long if it
muted
insider buying as well. And there's plenty of stocks that do. SXC has massive insider buying. It has massive institutional buying. It has the Twigs money flow soaring through the roof, even though prices changed. Well, look at the price when it was back here at $7. Money flow was -2. Price is $3. Money flow is +9. So why trade GoPro when you could buy this? It has better things going for it. And you stop to rely on the stocks you're familiar with when you have scans that just find these for you every day. Now, these are longs though. Let's have a look more back at the shorts. I mean, have a look at things like SBNY, Signature Banks. Again, head and shoulders pattern. Head and shoulder pattern, extremely divergent money flow, cheap options. Everything I'm telling you about at the moment has the potential to make 500 to 1,000%. Now, I hate talking about numbers like that because they sound, you know, airy-fairy, but you only get big opportunities in the market once every decade, statistically. I feel that there is one now. Now, it may not happen. We may be completely wrong. But if we're wrong, I still expect these stocks to drop. I still expect to make good money on them. If the market collapses with them, we'll make a lot of money on them. Okay. I see a couple of questions for your son. Yes, no problems. How old is your son, Ice? TWOU? Well, what do you think, guys and girls? That would scare the hell out of me. I'd be taking profit. It's gone right into its moving average. The money flow has taken a dive. I'd be out. CSH. Same thing. Well, firstly, let's establish where support and resistance is. Well, that seems to jump out pretty quickly at me, actually. There is your kind of channel. Let's have a look. Maybe not. I was going to say head and shoulders, but it's not quite perfect there. I mean, if you were really gung-ho on this stock, I'd probably give the moving average a chance to save its bacon. But there's probably a lot of really decent shorts better than this, and a lot of decent longs better than this. I think that the problem with this is that when you look at a stock, you have to ask yourself whether we are in momentum or oscillation format. And the way you answer that question is the stock listening to moving averages? And if it's not, what are the straight lines that are going with it? And we see that the straight lines in this whole, the moving averages didn't work for this stock for the longest time, right? So it was oscillating. It went back and forth as if the moving averages weren't even there. And therefore we know what type of pattern to listen to. It's an oscillating pattern, and that's why it's most likely a head and shoulders. That head and shoulders therefore dictates that the bottom should be around 29. So you may get a little bit of a saving grace here with some support around here. Now, the problem with that is that that works as long as the stock is still oscillating. And what we can see here is that the moving averages have started to take in a roll. And if we throw on the 5-day moving average, you'll probably see that come into place. There you go. There's your 5-day. Look how well it's listening to that. That's my concern. So when you have momentum, momentum trumps oscillation. So we're heading to oscillation support, but the momentum is more likely to break it than it is to hold. So odds are against it, but it does have a shot at holding that, in my opinion. And that will be your test. TVIX. Yeah, looks good. I mean, this is the VIX. I mean, I wouldn't be wanting to test. I mean, this is going to be playing. I think there's better trades than this, but because I hate to trade the stock market, I prefer to trade individual stocks. Reason being, as I talked about, we found, if let's say I only went long on Friday, I would have made really good money if I'd only went long. Or if I only went short, also would have made really good money. The point is, but if you decided that you knew which way the market was going, you've only got one outcome, right or wrong. But if you play the individual stocks, you've got the extra level of insurance. So I mean, you've heard a lot of the speakers talk about that. There's some amazing option traders here in the group through what Trade Thirsty offers you, and if you can add the technical analysis onto that to find these really good possible setups, and just trade the stock, or go and find some juicy options to trade, calls or puts. That's where the big money's made. Do we have a trading room? Yes, we do. In fact, when you sign up for the course, you're going to get an option to add that to your membership. It's $9, and you'll get all of our alerts of everything that I trade with my own money for the next month. So I'm going to buy a stock. You'll hear about it the day before I do it. And if I do it during the day, I'll send out a text message alert saying I am buying this stock at this price or this option at this price, and you get that for a month for only $9. You'll actually have the option of adding that. You get it for a week regardless as part of the Christmas bonus, because these alerts we're sending to you today are very time sensitive. So we're going to be doing updates on them all throughout the week next week up to Christmas. But if you want to continue beyond that week, it's only $9. Okay, let's have a look. MNGA. Yeah, no, that scares the hell out of me. Now, you've got the possible for a pennant here, right? But the money flow is going against you. So that concerns me. Let me show you a pennant that I traded on Friday that's more what you're looking for. This was a day trade for me. This is one of the longs that I took. I've got to bring up my account here. There we go. PACB. So this is one that I day traded. I didn't sit there and watch the screen. Again, it's all about efficiency. This was a flag formation. So to compare the two, once again, we get to look at every card. So if you like the fact that this has had a big move and is consolidating, why trade it when it's got a negative money flow? Why not instead trade this that has almost the same pattern, big shot up, consolidation, but positive money flow? And this is one that we were asked in our trading room actually on Thursday, and so it was a pick from our student. And I said, no, I'd be long that one as a flag. And I can't remember the exact target. It was 1233, but I sent out a text alert saying I was taking profit at about 1180 or so, just because the S&P was taking a big hit, and I was happy with that intraday profit, which turned out to be somewhere around 7%. But that was all pre-programmed, stop loss entry, everything. But that, don't you think that looks better than that? If you just follow the rules and take everything else out of your equation. NUGT, the 3 times junior golds. I'm not a huge fan of gold at the moment. I think that if you're looking for anything metal-based, you'd be looking at lithium, you'd be looking at uranium. I wouldn't be touching gold or silver at all until the gold commodity crosses, the physical gold commodity crosses the 161-day exponential moving average. ABEO, sure can. Oh, guys and girls, if you are having any trouble with your order, it means you may have entered the state with its full name. Please do just enter the abbreviation, AZ for Arizona, Florida for FL, Colorado, CO, and so forth. If you have any problems at all, it just means you probably entered the state in its full name. Not your fault. Just send us a quick email and say, hey, John, can you correct the order for us? And I'll get to the email address here in a second, but yeah, just send us a quick email address here, and we'll correct it for you and process it. There's the email address, info@acornwealthcorp.com. Okay. Now, for those of you who stuck around, I have one last surprise. And I always do this at the end, because I'm sure it's been a long day and you've had great speakers to listen to, but for those of you who've stuck right through to the end, here's my one last little surprise for you. I'm going to share with you a strategy that is over 80% accurate in predicting 1 to 3 weeks out of where the S&P 500 will go. Proven, back-tested, and has worked every single time for the last 16 months to over 80% accuracy. Who'd like to know that? Good. I thought you might. All right. Don't tell anyone. So, if you are not a student of mine already, I'm going to be sending out a $50 PayPal prize to anyone who guesses what this strategy is called. Students, you are already making money from this, so don't be greedy. Anyone who is not a student of Acorns already know what this strategy is called. $50 cash going out to the first. Lowry, that's you. Lowry, send us your email address, and if you are already registered for the course, we'll refund half of that back to your credit card, or take half of it off, either way. It's called opening range. Now, I was taught this by one of my mentors, and I'm humble enough to know that I know what I know best, but he knew something pretty special, and he taught me this about 3 years ago, and it changed my trading forever. And out of respect for the great crew at Trade Thirsty and all of you who've stuck around, it's my great pleasure to share it with you. The S&P 500, as does the market, operates with rules. Just why I've been telling you why it's so important to look at what the numbers tell you. The market makers have a way of communicating with each other, with the market, to set where they want to provide, well, let's put it in layman's terms, where they're going to send the market to, up or down. This translates into two very key days that tells you where the market is very likely going to go. The first most important day to look at is the first trading day of the month. So let's go back to August. You can go back as far as you like. If you sign up for the course, you'll get a 40-minute lesson on this topic anyway in the Capturing the Crash course. There's tons of stuff in there, not beyond the actual scan itself. So let's have a quick skim over what this actually applies to in the S&P. So the first trading day of the month is, where are we? Here. Okay. There's August, the first trading day of August, which is happens to be August 3rd. So on that day, the first trading day of the month is open range. What that means is we pay extremely close attention to zoom in, the high and the low of that day. Okay, let's just make those lines a little bit thicker. So, once we know what the open range is, and once again, the open range is the high and low of the first trading day of the month. That is the opening range of the month. Once we know that, we look to see whether the market closes more than 3 points above or below that range. If it closes above that range, more than 3 points, the market was very likely to remain bullish until the next opening range day, which means it should close higher than that range. If it's negative, it should close lower. Let's have a look at that open range. So there was open range, Monday, August 3rd. It closed below and continued to remain bearish. The next open range day, we're in August, let's just have a quick look at that. There we go, third Friday was the 21st. Oops. Okay, 21st was here. That's where open range struck again. So let's have a look at the range it set. There was that, and there's that. All right, let's get that clock out of the way. Closed negative means that the sentiment is going to remain negative to the next open range, the 1st of September. What did it do? Stayed negative. There's the 1st of September. What did it do? We'll have a look. This was really interesting. It didn't actually close above or positive. That's a bit fast. Let's go back to that. Didn't close above or negative until the very end of the period on September 15th, Tuesday, which meant it left 2 more days, Wednesday and Thursday, until that option's expiration Friday. So, closed above, bang. Got 2 days of bullish activity, open range worked again, new open range, Friday, September 18th. Closed negative, bang, went negative until October 1st, new open range, oops, I'm just going to not zoom in, how about that? there's your 1st of October. As you can see, closed higher, went higher. October 16th, there you go. There was your open range, closed higher, went higher. Now, here's another reason why we should be capturing the crash, guys, because the 1st of November was open range and we peaked. We closed below, so we shorted the hell out of the market. Okay, December 1st, second peak, key turning point. And options expiration, Friday for December, is what we just saw. So this is the most important thing for short-term trades I'm looking at, and what you're going to get to soak up in its entirety in Tuesday and Thursday session this coming week, is analyzing what happens now that we have set probably one of the most important opening ranges of this last 6 months. So, go back over the last 14, 15, 16 months and plot it and look to see if the market breaks 3 points above or below, and watch how deadly accurate it is in telling you where the market will go for the next 3 weeks. Okay. So, yes, first trading day and third Friday. There's my extra little Christmas gift. Now, that is in the course. So when you go through the stock market scanner course, the Caption the Crash, it is in lesson 2, I believe. And it goes through it in real delicate definition. Okay, now I'm sure I missed some people's questions because I got too excited about that. If there's any must have a look at stocks, throw them at me. But if there are any leftovers, feel free to get in the trading room on Tuesday. We'll be going through a lot of this stuff. But I would urge you to look at the alerts we've sent out in the Christmas wish list. There's it wasn't easy, and in those videos I break down all the patterns, all the criteria, the probability, insiders, all of it. GT. Oh, Jake. Jake, are you one of our students? No? Well, we actually alerted puts to this already. GT has significant insider selling. GT has cheap put options. GT is in a rising wedge formation. GT has broken that rising wedge formation and has already tested resistance and failed. We sent this out as an alert already, I think a day or two ago, actually. So I'm in full agreement, as long as you're thinking short, that this is a short. DIS. Walt Disney. Head and Shoulders. You can see I've already charted this one up. It's also a declining head and shoulder. So as surprising as this is, given the Star Wars and so forth going on, it's not looking promising. I could not go against I could not in good conscience call myself a technical trader and buy that. I don't care what movie they're making. This tells you, warning, Will Robinson, to pun intended, using a movie reference. This has $97 written all over it. UVXY, I can tell you already, I think there's better trades out there. It was one of my most profitable trades of the year, though. Having said that, I bought calls on the. I bought $35 or $25 calls. I can't remember now, but it was $25 or $35 calls, and we ended up selling them for almost 1,000% profit when they rallied from $5 to 37, 38. And that was when we did this. This is when we did this webinar first, and we're doing it again. So yeah, look, I still see a lot of validity in there. You can see there's obviously great divergence there in the money flow, higher highs. Higher lows. It's just so volatile. You've just got to be really. You got to be on it. It's not something you can just kind of sit in your back pocket. So I'm a bit of a lazy trader like that. I do all of my analysis and 80% of my trading when the market's closed, simply because of my travel schedule and just because I don't. If I have to be in front of a screen, it sounds more like a job than my money working for me. So. I don't like to have to be in front of the screen. This is a particular thing that I have trouble with. And something like UVXY could make you 500% in the first hour of the day and lose it for you the next. And it's too volatile for me. But if you're a day trader and you want to sit in front of the screen all day, it's probably a great potential trade. Was Twig's money flow included free for previous package purchases from Acorn? Simon, if you are a previous Acorn client and you don't have Twig's money flow, then you betcha. You let us know and we'll get you set up. What was my determination on GT? My determination on GT was we picked, gosh, what was it? Yeah, it's got large insider selling. It's got it's in the auto industry, of course, which is not doing great. The $30 April puts on Friday were quoted at $1.09. So that's what I was looking at, was the April $30 puts on GT. Facebook, also on my short watch list. Not happy to action it yet, though, but yeah, see, a stock like this, try doing this, guys and girls. When you start to see a stock that's kind of looking a bit weird, obviously the money flow is significantly divergent, so I like that because of that reason. But flip it upside down. Just invert your y-axis and see if you see a stock that you want to buy there. See, the problem is once again, I just it doesn't look perfect, and I feel that the reason I would trade Facebook is not because it's perfect, but because it's popular, and that's the wrong reason to trade a stock. So I don't like it because it's not perfect. That's my reason. Again, flipping it upside down, you can see that we've got this type of kind of, you know, it's just not clean. What I prefer is something like Coca-Cola Enterprises, which is something that we had alerted back a few weeks ago. So this one's got, if you go on the weekly chart, it's got a little bit more substance. I'll invert it again once more, and you can see therefore you've actually got a bump and run formation. So the bump and run formation, there you go, means basically when you get like a bit of a frying pan handle, then you get the frying pan down the bottom. And so that looks like it should go from 50 to 46, but typically with these ones they go a lot higher, which in this case would be lower, so we'll turn that back around. So it should drop down to 46. But you can see the money flows in our favor. It's already negative and has, by the way, massive insider selling. There you go, whereas Facebook isn't quite there yet. It's still being supported by the moving averages. So that difference means one's better than the other from a rules standpoint. So quite often I don't even know the company that I'm shorting because I don't even look at the news. All I want to know, and I usually task this off to my staff, is to make sure that anything I'm going long or short of doesn't have a pending announcement. That's the one thing we will avoid, is any kind of unknown risk if we're in the stock trade. What we do love, though, is buying options ahead of earnings when we feel that we know the edge. That's a whole other topic. So love options if love earnings if I'm buying options. Never hold a stock into earnings is my strategy. Do you use semi-log scale? Yes, on a stock like this you would use log scale when using your measurements. Not if it's something that if it doesn't have this much movement on the chart though, stick with normal log. Can I recap the offer? Yes, sure. So, the offer is, and well, I know that everyone loves the hottest stock tips. We all love that, but I think you'll get 10 times your money back minimum, even if you're trading a small account, just from those. Obviously, they're just suggestions, not recommendations. Do with them what you will. But that on its own is of massive value. But the meat that should hopefully help you make money long term without needing to keep buying more picks and more alerts and more subscriptions from us, and just to have some sustainability for your trading, something to work from, and add all of your option strategies too that I'm sure you're learning from other educators, is to give you a scan and give you a solid foundation technically. And that's what this course is all about. It's the smart money perfect storm scans, and that combines everything of how to maximize your potential returns in a downward market by looking for when all these stocks are just starting to fall, and the stock scan will find this for you each day, new alerts. So the first 2 hours tells you how to set that up, what the criteria are, why we pick those criteria, and the probabilities of each part of the process. So we don't just give you a magic box, we actually teach you every piece of it in layman's terms. And then the rest of the lessons are practical application. So how do you incorporate market conditions to when you run the scan? How do you incorporate open range into the scan? How do you incorporate all these different things? So it's the why and then the what to really concrete it all in. So by the end of the 8 hours, you should be picking the same stocks as us. But the bonus is obviously all the alerts. So there's about I think there's about 12 shorts, and I think about 7 longs, approximately, across those 2 separate videos. The longs and shorts wish list, as well as the entry, exit, and stop loss criteria that our strategy suggested, and the options we've looked at. And again, for full disclosure, I do own a personal position in most of those alerts, but it is, of course, based on my own risk requirements. The live class follows Tuesday, Thursday, 7 o'clock Eastern. It is recorded, so if you miss it, you're doing your Christmas shopping, it is sent out. And the add-on you have the option to when you subscribe is $9, and that keeps you going for a full month with daily videos on everything that we're looking at, and the same types of alerts. Okay, does Twix work with eSignal? Never used it, Chris. That's outside of my experience. You'd have to check, but I mean the programs that it does work for, some of them are free. So even if you used it as a last checkpoint after you've done your scans and just did that final check on a free tool, that would probably suffice. What temperature is it at where I'm at? It was 28 degrees yesterday, and I think it's about 22 now. And then on Boxing Day, I fly down to South Australia to go cage diving with great white sharks. So it'll probably be a lot colder down there. That's the top of my bucket list that I'll finally get to cross off. Only way to solve the state symbol issue is to log on a different computer. Oh, yes. Look, if you are having a problem with the states, it's because the cookies in your computer are saving it that way. But if you just email us and say, hey, the sign-up form is not letting you, we can all do it for you on the back end. We just simply change your manual entry into a 2-letter entry, and it corrects itself automatically. Can you use Chaikin money flow? Yes, you can. It's not the same. It's similar. It doesn't take into account the kind of gap ups and gap down calculations, so it's going to be a bit different. So you just have to get comfortable with the different readings. Obviously, in our alerts that we send out, they're all done in the programming of the money flow. But yeah, you should be happy. Look, I haven't worried too much about putting these up because I'm sure most people think that they're made up half the time. But these are real emails from people that took the course when we first launched it in July. End of July, and I've just copy pasted from my Outlook, and this is real stuff. We put a lot of effort into it. We probably put, 90% of my time goes into research and trading, and the other 10% into coaching because I genuinely enjoy it. But you'll not just see the fruits of the labor from the scans, but it also comes back down to whether you're identifying the patterns in the first place correctly. Because you can get the best scan in the world, but if you read the charts wrong, you could think you're looking at a downward channel that should break upwards, but when in reality you're actually looking at a head and shoulders that should break significantly down. And that all comes back to one very simple thing that most people overlook, which is have you drawn your charts right? I hate telling experienced traders that they need to go back to basics, but sometimes it's the basics that make us the most amount of money. And that's a very key component if you have the time to watch. There's an extra 2 hours on the end of one of the lessons that we give away to you. I get another freebie that says, look, this is the end of the lesson, but if you want to go further, keep listening. And there's 2 hours that I've added into the course that hasn't been talked about here today, which is all about proper trend line drawing. That if you don't draw the trend lines properly, you've got no idea what pattern it is. And if you don't know what pattern it is, you've lost 80% of the probability of the market of knowing where the volume's going, because that's very specific rules that they follow. So if you don't know the pattern, then you're in a guessing game. How do you get the money flow indicator? It'll be offered to you as a download when you get your registration package, or one of the pages that pops up then afterwards. Could you help with a $9 trade room offer, please? Sure. If you missed the offer or you cancelled it accidentally, just shoot us an email and tell us to add it for you. Just give us a few hours. We've had a lot of emails coming through already from everybody, so we will get to you, I promise. before the weekend, so you're included in those live lessons. Do you do a lot of earnings tradings? But a lot of the really big ones, big wins, I should say, this last few months have been stocks we identified with this scan, but then ended up trading them through earnings. So PII was through earnings, Akamai, AKAM, was through earnings. Hog is one that we're looking at, which has been on our watch list for a long time, which I bought puts in. I still own actually some puts, some $40 puts that expire next year, HOG, which we held through earnings. I mean, if they've got the fundament, again, all of these stocks I'm showing you, which again I hold puts in, have been moving down against the market, and that's what we want. So if you see the smart money's getting out, they know better than we do. The reason we don't hold stock through earnings is because you can't limit your risk. But with a option, of course, you only risk what you put in, and that's why we're more comfortable in doing that. Do you save the recordings of the trading rooms and send them out? Yes, usually within about half an hour of finishing the room. What's the monthly cost to continue? It ranges from $50 to $150, depending on if you need any one-on-one support. We're not just a one-stop shop, a one-man show, sorry, I should say. We have a large office in Vancouver. We have marketing staffs, coaching staff, support staff, sales staff, people answering the phone whenever you call up 24 hours a day. So you need help, you call us, we're there for you, whether you spend $50 with us or however much. You're a client to us, and we want to make sure you get value out of your money. So you need any kind of help at all, you give us a call. We'll make sure that we're there for you. Bring a killer whale with you. They eat great whites for lunch. Well, I'll bring a GoPro with me. Maybe I'll publish the YouTube video and see if we can help boost the stock, shall we? Do your techniques apply to UK stocks? Frederick, it works on UK, Australian, it works on US dollar versus the Japanese yen. What we're dealing with is we're not dealing with the stock market. What we're dealing with is understanding how money moves and the very succinct, well-defined patterns that it defines itself by. You have no idea how valuable it is when you start to get clarity on patterns and understanding when they're right to apply, and even more so how to scan for when they're setting up. It applies to everything. Which email address? I'll go back to our last slide here. There you go. Why are you opening up your edge and not just trade your own money or institutional money and collect management fees? Well, I've seen no effect. We send our alerts out to over 1,000 people. The stocks that we're trading are so large, a lot of the time, that they don't affect our entry and exit prices, and we're not front loading it and saying and buying it first and then recommending it or suggesting it. Like I just haven't seen a change. Now that this is not my only bag of tricks. I've been doing this for 14 years, so there is such a range of stocks that you can trade. I mean, the list that you'll see is about, as I said, about 12, 13 shorts and about 7 or 8 longs. But there's about 30 more that I could have added to both lists. It was really, and that's what took me 20 hours to refine it down to the best ones, was because I really had to get down to the very specific details, to the point that I even looked at the insiders that were buying and selling and looked at their track records to see, if they bought and sold in the past, how did it work out? Did they make a ton of money? Did they just happen to sell at the top and buy at the bottom every time in the last 5 years? We even went into that much detail to find the best as our end of year kind of bang to go out with some big winners and offer them to you today. Of course, it was very exciting to see them all do as well as they did, as you'll see. Offering it out to help other people benefit from the trading strategies is just an added benefit, which doesn't dilute our results at all. Can we get this deal after Christmas? Well, you won't get the alerts, and we don't do these alerts. This is the only ever time we've ever done these types of alerts. We did it once earlier in the year in July, and as a part of a different kind of course, different type of strategy. But no, we've never done it in this way before at all. We won't be doing it again in terms of this big Christmas wish list. So the risky run is that come January, a lot of those stocks may have already run their course. Maybe not, but that's the risk. Okay, so I think we've almost. What is the Ultimate Trader's Toolbox? If you're a fairly novice trader, highly recommend it. That's basically taking you through everything you need to know about price action, candlesticks, advanced candlesticks, Fibonacci's. Where do you measure Fibonacci's from? You got to know where you're measuring from. So yeah, it's a terrific beginner's course if you're new to intermediate. Do we supply the scan for Metastock? Yes. How do you find correlation with insider trading versus actual price movement? That is not a short answer. That you'll have to go through the course to find. I don't believe in giving short and dangerous answers, because a little bit of information can be more dangerous than no information, if you get me. I'm not trying to hold things back on you. Just I don't want you running away with a quick response that gets you in trouble. But there are ways to do it. There's a right way to do it, and we do take you through that. Amazon has been interesting because it's had a plummet. The only concern I have with Amazon is it's got a very powerful market maker behind it, and but you can see that significant divergence coming to the downside, and that's what makes it exciting. But I'm not going to jump into it until that penny drops. And it's interesting that you asked me about Priceline as well, David, because Priceline is the same stock in that same category that I've been watching. Not ready yet, but part of a head and shoulder, divergent money flow. Again, very powerful market maker behind it. 200-day moving average holding it up. Just be careful. I mean, you just got to beg yourself the question as to why Priceline when you've got, again, other ones like Berry. You know, which one looks more exciting to you? That's the question you have to ask. What's the best possible hand you could play? Not the one that you're most familiar with. Okay. How well do you? Oh, sorry, I misread that question, Hunter. How well do you find correlation versus price action? If that was the question, it depends. You've got to look at who's selling, what price they're selling at compared to the price it is now, how broad-based it was, the position in the company. We take all of that into account in our strategies. You can't just look at one person. It also doesn't matter if they were selling at 50 and the price is 10. So you've got to take into account relativity as well. But that's all part of the strategy which we use to scan. It's yeah. Good info, John. For your info, the total world cap on all stocks is 65 trillion. At 600 trillion, we are leveraged at 10 to 1. Pretty scary. Yes, it is. In fact, 10 to 1, as I learned the other day, was also the average cost of a house in Australia versus the average person's income. So you make 100 grand a year, your house costs you $1 million. That's pretty impossible to pay back, isn't it? So, and I've seen figures from all around the world. So yes, scary stuff, but very exciting if we're going to be on the short side. Are the alerts we will receive on Sunday still good for an entry? Yes, I'm very excited about the stuff that is in the course. When I published the videos, as I mentioned, I just finished doing 20 hours of research. I kid you not, it was 4 cans of Red Bull and 8 coffees, and it was probably the most excited I ever pushed a send button. But I had to get rest, so I only got an opportunity to get into about half the positions I wanted to. And upon reviewing them last night, they still look just as exciting. So I'm still going to be taking positions in more come Monday morning trading, and there will be an update, a new video updating on all those positions before Monday's trading as well, which you'll all receive if you're part of that. Okay, well, have you had enough Australian accent? I'll do one last question before my voice dies. NFLX. Same as the last. You see, with these big boys, you're going to get the same story. You're going to get these powerful market makers, and you can see they all look the same. Priceline, Amazon, Netflix, all look similar. There'll be a time for these ones, but just not quite yet, in my opinion. Okay, so final question I'll answer. When do you receive what? Once you've gone through the tradethirsty.com/toast process, you should receive the videos on demand instantly. You'll receive the alerts within the next hour, or half an hour to an hour, and then you'll receive the update on all of those alerts on Sunday afternoon, so before market open. Okay. But any problems, folks, anything at all, give us a call or give us, well, most likely an email now. We've got given our staff the weekend off. But look, it's been a pleasure. Thank you for sticking around and giving us so much of your time. I know you probably have a long day, and I hope that as a last speaker, we brought some great value to the mix. And it'd be a pleasure to work with you. But either way, I'd like to pass on a very merry holiday season. Almost said Christmas, didn't I? Yeah. Happy holidays. And a wonderful new year. Happy trading.
Thank you, Johnny, and thanks to everyone who has been with us all day long. What a wild and crazy day, but so much fun. And it is definitely the holiday season, and I'm okay with saying Merry Christmas because, oh, there's my dog. He wants to go outside. I've been holding out on him, waiting for Johnny to finish. You there, Johnny? What? Oh, I have to go let my doggy out. Okay, all right, y'all. Y'all have a great holiday season. Merry Christmas, Happy Hanukkah, whatever it is you celebrate. And we'll see you guys in January. Our next event is January the 27th, and that'll be our first one of 2016, so get ready. We've got some new people on tap. Have a great weekend. Watch for our emails with the offers, the ones that are expiring specifically, and then on Monday we'll have the replay out. Let me go let my dog potty because he's got to go. Y'all have a great weekend.